Hey there, if you're a homeowner in Georgia or you're thinking about becoming one, you've landed in the perfect spot. We're about to break down some real, data-backed tips to help you keep more money in your pocket. So let's just cut to the chase. The big question is, how can you actually save thousands of dollars on your home in Georgia? I know it sounds like a huge task, but we're going to break it down and make it super simple.
Okay, so here's the deal. We're not going to get lost in the weeds with a million tiny things. We are going to focus on the two biggest levers you can pull that will make a massive difference to your bottom line: your mortgage and, you guessed it, your home insurance.
And just a quick heads up, if you want to see all the detailed survey data and the numbers we're talking about today, we've got all the resources linked for you right below.
Here's our game plan. First, we'll set the scene and look at the unique cost challenges here in Georgia. Then, we'll dive deep into saving on your mortgage, and after that, we'll tackle home insurance. And to wrap it all up, we'll give you a super simple, powerful checklist to take with you.
All right, part one, Georgia home costs. Let's get a handle on the financial landscape we're dealing with right here in the Peach State. So this is where it gets really interesting. It turns out some key costs for homeowners in Georgia are actually a little bit higher than the national average. We're talking mortgage rates, about 5.89% here versus 5.78% nationally for top credit scores. And home insurance is more expensive too. That's exactly why finding every possible way to save is so important.
Okay, let's jump into our first major savings opportunity. Section 2 is all about your mortgage. This isn't just about the loan itself, but also about finding the right partner, the right lender to work with.
Now this is fantastic. This data comes straight from a survey of other Georgia homeowners just like you. And look at this. Credit unions are the clear winner with a massive 88% recommendation rate. That's way higher than banks and online lenders. And you know why? The survey shows it's because they offer better support and guidance, which is exactly what you need for a decision this big.
And to make this super concrete, let's zoom in on Atlanta. You can see exactly how your neighbors rate specific lenders. While Regions Bank does great, check out Delta Community Credit Union. It scores the highest for support and guidance. I mean, that's the kind of insider knowledge that helps you find a real partner, not just a lender.
Now, let's talk loans. The 30-year fixed-rate mortgage is by far the most popular choice, and you can see why. Here in Georgia, the average rate is 5.89% for folks with great credit. It gives you that predictable, stable monthly payment you can really build a budget around. But check out what happens when you cut that term in half. The average 15-year fixed rate drops all the way to 5.31%. Now, your monthly payment will be higher, no doubt, but that lower interest rate means you will pay tens of thousands of dollars less over the life of the loan. It's an amazing way to build equity and own your home free and clear so much faster.
So, let's just boil it all down. Here's the key takeaway for this section. If you pair a shorter loan term, like that 15-year mortgage, with a highly rated credit union that your neighbors trust, you are setting yourself up to save a truly massive amount of money.
Okay, we've tackled the mortgage. Let's move on to the second major lever you can pull. Section 3, saving on your insurance. Let's figure out how you can protect your biggest investment for less.
So first things first, we need a baseline. What are we even talking about here? Well, the average annual home insurance premium in Georgia for a house valued at around $300,000 is $1,995.
And here is why this section is so critical. When you put that nearly $2,000 number next to the national average of about $1,500, yeah, Georgians are paying over 25% more. That's a huge difference, but it also means there are huge opportunities for you to find savings.
Now, the single best tool in your toolbox for lowering that premium is your deductible. It's really simple. It's just the amount of money you agree to pay out of pocket for a claim before your insurance company starts paying. The higher the deductible you choose, the lower your premium will be. It's a trade-off.
And this table just shows you how powerful that one choice can be. Take a look at the data for a $300,000 home in Atlanta. If you have a low $500 deductible, your annual cost is almost $2,700. But look what happens if you raise that deductible to $2,000, an amount you can just stash in an emergency fund. Your premium plummets by over $800 a year. That's a 30% discount for making one smart decision.
And it doesn't stop with the deductible. Here are 4 other fantastic ways to save. Number 1, like we just saw, increase that deductible. Number 2, bundle your home and auto policies together. That's an easy 15 to 25% off.
3. Install things like a security system or smoke detectors. And 4. Keep your credit in good shape. Insurers in Georgia do use it to help set your rates.
So where do you even start looking? Well, according to other Georgia homeowners, these are the top 3 most recommended insurance companies in the state. USAA is at the top with a mind-blowing 95% recommendation rate, followed very closely by State Farm and Amica. These are the places you want to start getting your quotes from.
All right, let's bring this all together. Section 4 is your smart buyer checklist. These are the absolute key takeaways you need to walk away with.
Here it is, your cheat sheet for saving money on your Georgia home. 1. Start your mortgage search with credit unions. 2. Really think about a 15-year loan to save a fortune on interest. 3. Pick the highest insurance deductible you can comfortably afford. 4. Always ask to bundle your home and auto policies. And 5. Get quotes from top-rated insurers like USAA and State Farm to get both great service and a great price.
So now you have the playbook. You've got the tools, you've got the data. The only real question left is, which one of these powerful steps are you going to take first to start lowering your home costs?
And if you want to dive deeper into any of the lender ratings, insurance costs, or the survey data we talked about, you can find everything at the resource links provided. Thanks so much for watching.